Good afternoon. This is Tom Alexander. It is Sunday, June 18th. It is Father's Day. Happy Father's Day to all of you fathers out there. Okay, there's a lot to discuss this week. This is the video addendum to a written report that is free that I post every week. If you would like to get the notifications of when that report is posted, please send me an email to tom@alexandertrading.com. I will put you on the list. You will be notified when I send out free information, and you will be notified when I post the weekend report. Now, I want to start this weekend by showing you where you can go. And this is my website, alexandertrading.com. And the weekly updates are right here. You can go to this website right now, click on weekly update. You can see my past weekend reports. I've been doing this for years. Now, all of the years are not on here, but a significant number I've been posting my reports, my weekend reports on this website for quite a while, in addition to sending out notices. I used to put the entire content in the email. I've stopped doing that. It's just easier for all parties, me and you. If I post it here, you can go back in here, you can click on any given weekend that you choose, and you can see what I said and see if it's consistent and if it's accurate, and you can be the judge of that. Now, let's move into this week. This week coming up, there's so much going on in the market. It's such a different market than any market that I can recall in my 38 years of trading. It truly is different this time, where you'd be hard pressed not to argue that we're in a bull market in the SPX and the NDX, and maybe the Dow, but the Russell is still up in the air. It has been, I do not recall seeing the level of technical divergences. I mean, the structure, not technical. Well, we do have technical divergences, which I'll get into, but the structural divergences that we have now are just absolutely unlike anything that I've seen for this period of time. And I think the poster child for that right now is this chart that I'm going to pull over. And this is the daily profile of the SPX, the NDX, and the Russell. Now, this is the daily profile, which means each letter is 1 day of trading. Those of you that are familiar with market profile, it is a way of displaying market data. There's nothing magic about it. It is was designed, its original intention was designed to help identify auction market condition, nothing more, nothing less. Like everything else in traderland, it has been hijacked by the magicians and turned into something that it's not. It's not magic, but it can be very helpful at times in identifying market condition. And we're gonna get more into market profile because this is one of the times where I think it's really helpful in getting an idea about what is most likely to occur next. But back to the point at hand, and you have the SPX and the NDX in initiative phases of development. An initiative phase of development is a trend. On the other hand, you have the Russell in an increasingly mature structure. So this is the type of thing that has been vexing since the October lows. You've had this incredibly disparate structural divergence among the indices, and it has almost always, the Russell has almost always been the outlier in this subset. Now, let's go to the daily charts. I'm going to start with the weekly charts, and we'll go through each one. And I'm going to, let's see. Let me see if this is the one I want. Okay, this will work for now. Now, the first thing I want to bring your attention to, this is the October low. Off the October low, we're up like 27+%. We're only about 8.4% from a new all-time high in the SPX. Now, again, this is a weekly chart. I have some retracements drawn over here because I wanted to do this for a couple of reasons. First of all, it gives you an idea about, we are extraordinarily vertical. We're up in the SPX 4 consecutive weeks. we're overdue for some sort of rotation that includes some sort of retracement. Now, it's important to note, if we're in a bull trend, the retracement should be relatively shallow. This is sort of indicative, these retracements of between three, this happened to be a pretty large one, but my gosh, we were up an incredible amount into this top. I'll show you here. Here we go. So we were up 60% before we had 11% retracement. But along the way, we had a 7%, a 5%, a 7%, et cetera. So my point is, we're up 4 consecutive weeks, and this is evidence on the side of the idea that we're forming some sort, we could be forming and soon should be forming some sort of short-term top. Another view of that, another perspective of that, we're up 4 consecutive weeks. I went back a year and a half or 2 years and highlighted the other periods of time when we were up had 4 consecutive weekly closes, and you can go through here and look, and there are some exceptions, but most of the time you were due to either at least a short-term blip or a more significant retracement that included some form of balance. So you can take a look at this for yourselves. And again, it's posted on the website if you want to spend some time to examine it more closely than I'm going to sit here and hold this. Now let's go look at the other indices real quickly. The NDX, of course, is just on fire. It is up like 7 out of the last 8 weeks. This is a rate of change that is not sustainable. Again, there's substantial evidence on the side of we're going to enter a more two-sided market on a day-to-day basis, and maybe even a weekly basis than we've seen in several weeks. The NDX is up almost 46% off the October low. In the last 2 months, it's up almost 20%. It's less than 10% from an all-time high. If we look at, let's go to the Dow. Now, people don't realize this, but the Dow is the index that is the closest to its all-time high. It's just that it made its gain, its largest gain, and it sort of topped out in December. I mean, it had a ramp, an epic ramp that rivals what's going on in the NDX that began second week in October and completed dramatically in the end of November, the beginning of January. And then we come to the Russell, and the Russell is a long way away from an all-time high. It's only 16% off its low. It's breaking out of a balance area, but you can see here it has work to do to get even above its next level, which is right here, okay? Now, I want to show, let's show this first. All right, here's a profile. Now, this is a daily profile of the Russell, and it's very clear that this is the highest use of the market profile graph, is to help you identify market condition. And this is a classic 3-step auction process. You have a trend, you have a stopping price, you have a development around that price, and the process starts over. So the important levels are the upper extreme and the lower extreme of this balance area. The Russell closed on Friday right here. Now, under a bearish scenario, this is very likely to break down. If the Russell were to break to the upside, it would be bullish. Now, if the Russell does break to the upside and we see breadth expand, which I'm going to talk about in a minute, that would be a very, very positive thing, and it would prolong the trend that we're in now. Would likely prolong the trend in the SPX, the NDX, but I would imagine that they would underperform relative to the Russell if the Russell were to break to the upside out of this increasingly mature balance area. Okay, let's look at the SPX. Now this is the daily SPX, and the profile graph is a visual view of market development that emphasizes trade activity on the horizontal scale, not the vertical scale. And this is not a normal looking profile unit. Now, this is a daily profile, meaning each unit is 1 month. The month isn't complete, but this structure is already too vertical. It's not going to end up this vertical. It's extremely unlikely to end up this vertical. We can go back and you can look at previous months that included some epic runs both up and down in the NDX, and you don't have anything. I can go back years, okay? You don't have anything that comes close to the initiative look of this structure. This is a very incomplete auction structure in this particular time frame. So again, that bodes well for the idea that we're going to see a more rotational market and that you're going to form some sort of volume node beginning sooner rather than later. And then if we go to the NDX, it's even more dramatic, really. It's the same relative view, but it's just as vertical as it can get. This is not a normal auction. This is a structure that is very, very, very incomplete in development. And again, please go to the website, look at the charts that I've posted on this topic in the website. And I've given a couple of different paths of potential development off of Friday's close. Now, let's take a look at the technical situation of the market. I apologize. This is a much busier chart than I typically use. I don't like a lot of stuff on my charts. I don't use magic indicators, oscillators, and all that other stuff. What you see on this chart below the price is NYSC data. The red line is simply a 10-period moving average of NYSE advancing issues. The green is a 5-period moving average of advancing issues, and breadth below is just that. It's NYSE closing breadth. Now, this is baffling to me. We have gone so far. We've come so far. We've rallied so much. And the last time we had 3 consecutive days of closing positive breadth was way back here in, when was this? May, April, not May, April 11th was the last time we had 3 consecutive up days closing NYSE breadth. That's something that is not going to continue. It will not continue. Also, it's obviously we have significant divergences between the 10-day moving average of advancing issues and price, the 5-day moving advancing issues and price. Now, the caveat here is this can change. If the big money comes in, they start pushing the buy buttons, breadth will expand, and these divergences, these oddities that we see in front of us right now will be erased, and we will have a very bullish event on our hands. So what are the levels we want to watch? Well, the levels we want to watch. The Dow is already in an upper key reference area that is important, and it's also these areas are inflection points. So what you're looking for here when a market reaches one of these auction market inflection points, key reference areas, you're looking for a sharp move away from this area, a sharp move being relative to the recent trade around it. So you do not expect the Dow to hang around this level for long. If we go to the SPX, the important level to the upside is just about 1.2% away, which is around 4,500. And then to the downside, 4%. Now, remember the chart I showed a few minutes ago of retracements and bull trends. If we're in a bull trend, I think 4% might be all you can expect. This certainly, if we do get a decline into this area, we'll want to take a look at the short-term technicals at that point to see what clues we might be able to derive. Okay, if we go to the Russell you can see very clearly is in a multi-day increasingly mature balance area. The immediate level of the upside is around 1907 to the downside about 1862. If we close below 1862, the level that comes into play is 1820, 1798. And the Dow. Oh, no, not the Dow. What did I leave out? The Russell, not, the NDX. The NDX closed at the upper extreme of this key reference area. Now, this is an area that you can go back and look in the weekly reports. This is not the first time I've highlighted this area. And then to the downside, you're here. And again, we're less than 10% away from an all-time high. So let's take a look at one more thing here. VIX. Here we go. Now, VIX is the lowest it's been in a couple of years. And actually on Friday, it may have made an even lower low. As long as VIX is declining, it's bullish for the market. If we do ever get a retracement, expect to see something north of 15. But, really the VIX has been very low since the end of March. So this fits with a bullish present market. Now, if we're near a short-term high, VIX is likely to increase to one degree or another, and that's something else we'll be watching. Hope you found value in this. Please, if you haven't subscribed to the channel, please do so. If you found value, please like it. And if you want to make comments, I'll answer any comments or questions you may have. You guys enjoy the rest of your Father's Day.